All right, good afternoon, everyone. Today is Thursday, December 29th, 2011. This is going to be the last recap for 2011, and it'll also be the last, I think it's going to be the last radio show for 2011. It'll be the last webinar in here for 2011. So I want to wish you all a Happy New Year, because I won't be seeing any of you. Unless you're in the partners meeting tonight, I won't be seeing any of you until next week. We're going to pick things up on Tuesday. All right. Just a reminder for everyone, the markets are closed on Monday. There's no nighttime trading Sunday night. So the markets will be closed until Tuesday morning, I believe. All right. Now, the trades. Okay. Right at the open of the market, actually just a little prior to the open, there was one of the George trades. All right. Now I typed in the rules for the George trade right here. The first one is price gets a minimum of 3 ticks outside the box, which you can see it did right here. All right, we got 3 ticks outside the box right there. Number 2 is price pulls back to the BBC when the BBC is inside the box. The BBC is the green line. The box, by the way, is denoted by the dotted line right here, and the solid line, the red solid line and blue solid line. All right, it's the elbow indicator. But it pulled back down to the BBC inside the box. Okay. And the entry is a limit order, rounding away from price. You can see right here, the BBC was at roughly 48, probably 48.60, something like that, 48.65. You would round that down to 48.50. All right, round it away from the price to 48.5, and put a limit order there. All right, with a 2-point bracket around it. George does not move his stops. All right, George just puts it on and lets it go. This one did go to the profit target up here. Actually, the profit target was right there. But it did go up to the profit target and make 2 points. We did not take that trade. It was a pre-market trade when it actually set up, so we didn't get into that one. And we were right inside a weekly trading zone, so we didn't want to get involved in that either. All right, the next trade that set up over here on the 4-tick range was over here. Now, you see the rules are in here as well. All right, number 1, you get a higher or lower swing pivot, depending which direction you're trading in. In this case, we're going long, so we got a higher swing pivot. This was the actual swing pivot at the time. All right, we got a higher swing pivot right there. We had a fresh bubble, which means both of these red bands down here get outside the black bands. I know you can't see very well in here. You can't see very well in here that it did that, but it did, in fact, do that. And it got outside down there. So we had a fresh bubble. And then you get a pullback to the BBC. Now, the pullback right here was to the BBC. In this case, we enter with an MIT order, rounding the BBC up to the nearest tick. When the BBC is outside the box, we're rounding it up. Okay, in this case right here, we were... where did we get in? We got in at 51. So we had our order. Our order was at 1250.75 is where our order was. It was an MIT order at 1250.75, and it filled us and got us in at 51. All right, our target was 53. We did go up and hit our target here, but it didn't trade through our target. It didn't fill us at the target. I had moved my stop up to plus 1 point, which is what we got on the morning. All right, we got plus 1 point or plus 12 ticks for 3 contracts. We got plus 1 point on this trade. All right, now going through the rule set again, we got a higher swing pivot, which was right over here. Okay, we had a fresh bubble, though you can't see it all that well, is right here. The red lines got outside the black. The pullback to the BBC, and I have in here it must be clean, no higher pivots for longs or lower. No lower high pivots for longs or higher low pivots for the shorts. You can see in here it was a clean pullback straight down to the BBC. And I entered with an MIT order. All right. Now you might be asking, well, what about this next one? That one, the BBC is outside the box. We had a higher swing. It was a nice pullback down to the BBC. But we did not have a bubble. All right. We did not have a fresh bubble down here. So we didn't take that one. It would have worked out had we taken it, but we didn't take it. Now, the market slowed right down. Once it moved up here, it slowed right down and started to crawl. You can see right here, between right here at 10:34 and over here at 11:09, a little over 30 minutes, we had about 8 bars. As price was moving over, we had our order to enter right in here, but once this bar moved right here, it put in a double top, which means there's a space right there that disqualifies the trade. All right, I think I was going to go back and illustrate over here what a clean pullback is right here. All right, a clean pullback would be like this. An unclean pullback is when you get a double top like this, and there's space in between like that. I can draw a trend line down the tops like this. Okay, I can draw a trend line down the tops. That means you did not get a clean pullback. Okay, so that would disqualify the order, just like this one over here did. All right, so as we move on, that was pretty much it for the morning as far as trading went. Down here, we didn't get a trade. It was going into the zone. We didn't get an opportunity there, and up here, we didn't get an opportunity either. And this was all during the break period. Now we'll move over here to the YM because we had a YM trade this morning too. All right. Now the deal with the YM is you want to get a cross of the BBC by the MA1. That means this green line right here, you want to have a cross of that by the MA1, a bullish cross, all right, for a long trade. And then after price is moved away from the BBC, like all this space in here, price is moved away from the BBC, the pullback to the BBC is where you're going to be looking to enter. So right here at the BBC. I prefer the first one. All right, all the ones after that I don't like as much as the first one, but I was waiting for the first pullback here. All right, Dwayne actually took this trade. I didn't take this trade. Dwayne took this trade, but he went long here at 21.52, 121.52. He went long there, and his target was right up here. All right, his target was the MA1, the window of opportunity. You can see it right here. Window of opportunity is the area between the BBC and the MA1. BBC to MA1. So his target was right here, his initial target. If the MA1 were blue at the time, he may have put his target beyond that. Up here where the weekly trading zone is, it made it up to the zone. He may have put his target up there at the zone, or maybe closer to the swing high right over here. All right, but because it was red, he just looked for the MA1 to be his target, and he got 12 points out of that. All right, and that was the only trade that was taken on the YM this morning. Okay. Now I wanted to go through these one by one. Cross of the BBC, we got that. After prices moved and a pullback down to the BBC for the entry. That's pretty much it. 1, 2. That's it. 2 rules, 2 steps. Over here on the 2100, I'll show this one too. All right, I'm going to blow it up a little bit. Going to blow it up a little bit for you so you can see it a little bit better. But what you're looking for here is similar to that, a cross of the BBC by the MA1, which is right there, a pull away from the BBC, which is right here, and a pull back down to the BBC. So your entry would have been right in here. Now, let me bring this up so you can see the actual timing on this. This was pre-market, so we didn't do that. Now, there's a number 3 down here that says the cycle needs to be below the 50 for a short or above for a long. Over here it was above. All right. Now the next opportunity when you got the higher swing was right in here. Okay. Now this is a Mike R trade, and I believe he would be going for 5 points on this if he got this one, and he would have because he trades pre-market. He would have been long over here and gone for the whole 5. But trading just from the open right in here, if you're trading just from the open right in here, once you got a higher swing here and a pull back down to the BBC right there, you could have gone long right there. Your risk would have had to have been down below here. Okay, looking to make 5 points out of that. And the entry would have been in here at 49, and it went up to 55. Okay, so you would have gotten your 5 points out of that. All right, even if it was 49.5, you still would have gotten your 5 points. 5.25 is what he goes for. Either way, you would have gotten it. All right, but here are the rules for that. Now, he does have some nuances. Mike R has some nuances. Mike R is one of our partners who who added nuances to the typical sandbox trade that we have. He simplified it in some ways. He simplified it, and he changed the risk and reward on it. Okay, he'll often go for 5 points on each trade, or he always goes for 5 points, but he'll often get the whole 5, 2 or 3 times a day. All right, that was the cross of the BBC, the pullback to the BBC. After prices moved away from the BBC, and the cycle needs to cross below the 50 line down here on the cycle. All right, it needs to be below it for a short or above it for a long. Yep, that was it. Now we didn't go short here because we had, well, because it was in our break period and because we had the weekly trading zone right below us. All right. Going to minimize that, and I'll bring over some other charts here for you. I didn't write rules down on any more charts, but I'll just show you some other things that we were looking at this morning. This is the 6E, and this morning we were watching the 6E because it was sort of leading the ES most of the time. One of the things that I was showing the folks in the room, I had drawn in these rectangles before price was there. There was nothing here. Price was actually over here, I think, when I had drawn these in. But what I was looking for is divergence. This area right here is when price starts to divert. Not price, but the combo indicator starts to show you divergence. Now, once you get this little bit of divergence here on the combo indicator, the next pullback to the BBC, if the red and blue line on the combo is overbought, you're going to be looking to go long. All right, so you want the elbow to be broken to the upside. You want the elbow to be blue. The elbow is this indicator right here. These couple of lines in here, the red, blue, and dotted line. That is the elbow. You want that to be blue, to be going long. You want price to pull away from and back down to the BBC. Okay? The entry is at the BBC, and you just hang in there for a nice trade. This was the next, actually, this was the first opportunity right here. I believe I had drawn in some levels in here where I thought if price got below it or above it, it was gonna have a nice move. Anyway, when this started to happen, I was saying all these lines were up here. It was going to be the start of divergence, is what I had anticipated. Okay, Jeff. We can go over that in the partners meeting tonight if you want. But I was trying to predict when the divergence was going to happen. It didn't actually diverge. The way the market came together, we didn't get divergence. But right here is where it would have started to happen had the market not moved so quickly. And I was predicting where it was going to hit the BBC as well. Right here is where it did hit the BBC. I said it would be inside this box. Right here is where it did hit the BBC. Again, price moved too quickly and we didn't have divergence, so we didn't get a trade set up there. I drew in these lines. Right here as price started to roll over. Okay? We had some bearish divergence right here. We needed the elbow to break to the downside. Okay, once the elbow finally broke to the downside over here, we had more bearish divergence. So this spot right here was the entry, the pullback up to the BBC in this case. After the elbow was broken to the downside, we had divergence right here. This right here was the spot to enter. All right. Now, I didn't continue on in this, but this is the way that it worked out. We had bullish divergence here because this line is overbought. All right. So we had divergence. And this right here was the pullback that we would have been looking to enter on. Okay. That was the morning right there on the 6E. Jeff had thrown out another option for entry here on the MA1 on the 6E. I mean on the sorry. Another way to enter here with the divergence on the 6E. And we can go over it tonight in the partners meeting for anyone who is a partner. And if any of you guys are in here on a trial and you're not a partner yet, send me an email and I'll tell you what you need to do. All right. Again, did I type in my email here? I don't know if I did. My email is tech@cfrn.net. Okay. Anybody that becomes a partner now also gets grandfathered into the swing trades, which I know we haven't given too many of lately, but that's because of the range of the markets. But anyone who becomes a partner now gets grandfathered into the swing and option trades. All right. Once we start to separate the swing and option trades and make that a separate product, then people are not going to get grandfathered into it anymore. They'll have to buy it on its own as a separate individual product. All right. Let's see. Oh, there was another market I wanted to look at. I wanted to look at the Russell quickly. All right. Let's see. I'm just going down the list of folks that are in here too. Let's see the Russell. Here it is. Now the thing with the Russell, we only had a couple of trades. Oh, when I first looked at it this morning, anyway, there had only been a couple of trades, and it's still true. What we were looking at with the Russell was there was one pre-market trade. Actually, it was yesterday. We'll go back to yesterday. All right, this is a 10-tick range on the Russell, and because of the light volume, the Russell hasn't been trading all that much, or hasn't had that much range. So we could reduce this to like an 8-tick or maybe a 6-tick range, just so there would be more opportunity. But given what we were looking at, there would have been a short trade right here. This was yesterday afternoon. A long trade right here. Okay. And this is pretty simple stuff too. What you're looking at with this is you just want to have all these lines going in the same direction. Same thing over here. All the lines going in the same direction. Okay. Over here they weren't all going in the same direction. Over here they weren't. Over here they weren't. Right in here, they were all going in the same direction. Oops. I clicked on the wrong little arrow thing. Right in here they were all going in the same direction. All right. Right over here they were all going in the same direction, so this would have been the first trade to not work out. Right there. Okay. Now I don't know. I haven't looked at what this looks like on a faster time frame. It was just the 10-tick range, but I'll take a look at it with you live right now, and we'll see how it would have looked. All right. I'll just flip it down to a 6-tick, just based on what we had today. Yeah. So we would have been going. I'll just point to it. Right here, we would have been looking to go short. All right. Right in here, looking to go long. Right in here, looking to go short. So we're not too far off that short right now. It was pretty choppy in here, but right in here we would have been looking to go long. All right. So there would have been a few more trades. Going back to yesterday, I would have been looking to go short right in here. And short right in here. So you would have gotten into some of these a little faster based on faster time frame, which is not unusual, but it all would have worked out. Okay? It all would have worked out just the same. Let me slide that off, and I think that is it. Does anyone have any questions that I can answer? Anyone? Okay. I'm not going to hang around here and drag this out and drag this out for you or on you. Okay. If nobody's going to ask any questions, then I'll just leave my charts running, and you guys can watch my charts if you want to. Those of you guys who are partners, active partners, there's a partners meeting tonight, all right, at 9 p.m. You will be sent a link to it. Prior to the meeting, if you don't have it already, you'll be sent a link to it. If you do not have a link by, we'll say, 8:45, send me an email at tech@cfrn.net, and I will send you the link. Okay? Wait till 8:45 though, because sometimes I'm not sure when they're scheduled to go out. but I think they don't go out until a half hour before. All right. All right. That's all I have. If nobody's got any questions, then I think we're just going to wrap it up. Okay, I can call you, Jeff, but yeah, that's right. You wanted to talk about getting ours synced up. Hang on. I do have mine working right, but it doesn't buzz when I get one in my phone. When I get one on my phone, I should say. All right. You know what? I'm gonna